Hi, you're watching today's Forex video briefing. I'm Fan Yang, your Chief Technical Strategist here at ForexMinute.com. It is Tuesday, July 29, and we're in the middle of the US session. The market is well aware of the key fundamental factors tomorrow from the US. ADP employment change is followed by advanced GDP estimate for the second quarter. The FOMC is also scheduled to make its monetary policy announcement tomorrow after these two data points. With that in mind, it appears that the market is pricing in a hawkish FOMC statement as the US dollar trucks along. Let's take a look at the euro dollar, pound dollar, and the dollar yen pair. The euro dollar is falling towards 1.34, and there is no reason to believe that it will reverse, but the RSI readings in the 1 hour chart, 4 hour chart, and the daily chart, they're all below 30 and therefore are in oversold territory. There is still some downside risk toward the 1.3295, 1.33 November 2013 low, but we can expect some near-term consolidation, intra-session consolidation around 1.34 given the oversold technical signs, and because traders might not want to be caught too closely in front of tomorrow's fundamental risks. So we might not see that many traders pressing the sell button until after tomorrow's fundamental risks. Now, if at the end of the day the FOMC is hawkish and indeed hints at a rate hike before mid 2015 or accelerates tapering, we might see euro dollar fall towards 1.33 without a hitch, and we should see it keep below this week's high of 1.3445. Okay. Otherwise, if the FOMC is neutral and does not speed up tapering, we can expect some further consolidation around 1.34 with some upside risk in the short term toward the 1.35 towards the 1.35 handle, which was June's lows, and might be reinforced by a falling trend line from the year's high. The pound dollar pair continued to fall today and is now inching towards the rising trend lines in 2014, as well as a rising trend line from the November low in 2013. Okay, all these trend lines are just above the 1.69 handle. This is a key support area to monitor for after tomorrow's US fundamental risks. A break below 1.69 opens up the 1.67 support pivot. Now, we should first respect the 200, or I should say 100-day moving average here, which is around 1.6850, especially if the RSI is below 30. But if we have broken below the trend lines and we get a pullback from, let's say, 1.6850, the 100-day SMA, then we should look for resistance in the 1.70 area, which is this week's high, and you see previous resistance pivot as well. Okay, so with a break, look for sellers on the bounce back to 1.70. However, if there is no break after tomorrow and after Friday's non-farm payroll report, then we can expect some consolidation and with upside towards 1.71. Now, if the market pushes above 1.71, we should be considering the bullish continuation scenario, especially since these trend lines have been intact. But if we get a bounce, market stalls at 1.71, given some elbow space, then we can say this price top is still in and the market is still in consolidation, and we still can see another challenge of this 1.69 area. The dollar yen pair is breaking above 102 and the falling trend line from June. It is essentially now testing the 2014 descending triangle resistance. Will traders remain bullish after tomorrow's data points and FOMC decision? A break above 102.50 would open up the bullish outlook first towards the common resistance around 103, then towards the 104, 104.13 April highs. If price fails to push above the triangle tomorrow, we will have one more chance on Friday's non-farm payroll report. But if this week of key U.S. fundamentals fails to push the dollar yen above the triangle, then the focus can return toward the 101.10 lows down to the 100.75 2014 lows. And that wraps it up for today's Forex video briefing. Once again, I'm Fan Yang, your Chief Technical Strategist here at ForexMinute.com, wishing you safe and good trading.